Assalamualaikum and good day everyone. I am Mamanda Kahafsha and I'm going to continue the discussion about the auditing internal control, which is the part 4 of this report. Organization management is required by law to establish and maintain an adequate system of internal control. Consider the following Securities and Exchange Commission statement on this matter, which is the establishment and maintenance of a system of internal control is an important management obligation. A fundamental aspect of management's stewardship responsibility is to provide shareholders with reasonable assurance that the business is adequately controlled. Additionally, the management has its responsibility to furnish shareholders and potential investors with reliable financial information on a timely basis. It says that the internal control, organization management, nire-require sila ng law na mag-establish at mag-maintain ng internal control, which is the Security and Exchange Commission. It says that yung pag-establish at pag-maintain ng system ng internal control is very important when it comes to management obligation. So the fundamental aspect ng management stewardship responsibility is yung mag-provide sa mga shareholders with a reasonable assurance that the business is adequately controlled. So, yung mga management has a responsibility, yung responsibility nila na mag-furnish ng shareholders and potential investors with a reliable financial information on a timely basis. So moving on, the brief history of internal control legislation. Since much of the internal control system relates directly to the transaction processing, mga accountants are the key participants in ensuring the control adequacy. First, we have the Security Exchange Commission's Acts of 1933 and 1934. So following the stock market crash of 1929, during this time and the worldwide financial fraud by Ivor Grigor, the U.S. legislature passed two acts. Siya yung nag-pass ng two acts to restore the confidence in the capital market. These are the Acts of 1933 and Acts 1934. The first was the Securities Acts of 1933, which have two main objectives. First is it requires investors to receive financial and other significant information concerning mga securities and securities being offered sa public sales. Second is yung mga prohibit deceit, misinterpretations, and other fraud in the sales of securities. So on the second act, which is the Securities Exchange Act 1934, it created the Securities and Exchange Commissions and empowered it with the broad authority over all aspects of the security industries, which included yung authority regarding sa auditing standards. In Copyright Law 1976, so this law, which had a multiple revisions, it added software and other intellectual properties into an existing copyright protections law. So this law, it concerns the two IT auditors kasi the management is held personally liable for violation if raided by the software police and nakahanap sila ng sufficient evidence of improperty. Here in the Foreign Corrupt Practices Act of 1977, mga corporate management has not always lived up to its internal control responsibility. With the discovery that the U.S. business executives were using their organization's funds to bribe foreign officials, internal control issues, formerly a little interest to stockholders, which quickly became a matter of public concern. From this issue, it gives a passage of the Foreign Corrupt Practices Act of 1977. So, kaya nangyari yung na-created or na-establish ang Foreign Corrupt Practices Act because of that public concern or issues na nangyayari. So, among its provision, the FCPA requires the companies na mag-register sa Security and Exchange to do the following. First is yung pag-record ng mga pag-record fairly and reasonably reflect the transaction of the firm and its financial position. Second is yung pag-maintain ng system of internal control that provides a reasonable assurance that the organization's objectives are met. So, in a Committee of Sponsoring Organization of 1992 rather, the following the series of S&L scandals of 1980s. A committee was found to address these frauds. So originally, mga committee that took the name of its chair, which is a Treadway, but eventually the project became known as COSO, which is Committee of Sponsoring Organization. Yung sponsoring organization included yung Financial Executive International, the Institute of the Management Accountants, the American Accounting Association, the AICPA, and the IIA. The committee spent several years na pag-promulgating a response kasi it was determined early on the best deterrent to fraud was strong internal controls. The committee decided to focus on an effective model for internal controls from a management perspective. The result, the result of that is the COSO model. So the COSO model is the IACPA is the adapt niya yung model into an auditing standard, and it was published as SAAS number 78, which is the consideration of internal control in the financial statement audit. Lastly would be the Sarbanes-Oxley Act of 2002. So, as a result of several large financial frauds, which is like the Enron, the WorldCom in Adelphia, and the resulting losses suffered by stockholders, pressure was brought by U.S. Congress to protect the public from such events. So, in that issues, this led to the passage of Sarbanes-Oxley Act or the SOX on July 30, 2002. In general, yung law supports the effort to increase the public confidence in the capital market by seeking to improve a corporate governance, internal controls, and audit quality. Moving on the internal control objectives, principles, and models. So, an organization's internal control system comprises policies, practices, and procedures to achieve four broad objectives. First is to safeguard assets of the firm. Second is to ensure the accuracy and reliability of an accounting records and information. Second is to promote the efficiency in the firm's operations. And lastly, to measure a compliance with the management's prescribed policies and procedures. So for the modifying principles, inherent these control objectives are four modifying principles that guide designers and auditors control system. The management responsibility and the method of data processing and the limitations and the reasonable assurance. So these four modifying principles. So these are the four modifying principles. First is the management responsibility. The management responsibility, this concept holds that the establishment and maintenance of a system sa internal control is a management responsibility. Although yung FCPA supports this principle and XOX legislation makes it law. So, on the second is the methods of data processing. This is the internal control system should achieve the four broad objectives regardless of the data processing method used, whether manual man siya or computer-based. However, the specific techniques used to achieve this objective will vary with the different types of technology. Third is the limitation. So every system of internal control has its limitations. So on its effectiveness. So this include first is yung mga possibility of error. No system is perfect. Second is the circumventions or the personnel may circumvent the system through the collusion and other means. Third is yung management override. This is the management is in a position to override the control procedures by personnel distorting transaction or by directing a subordinate to do so. Lastly is the changing conditions. So the conditions may change over time so that the existing effective controls may become ineffectual. So for the last modifying principle would be the reasonable assurance. The reasonable assurance, the internal control system should provide a reasonable assurance that the four broad objectives of the internal controls are met. This reasonableness means that the cost of achieving improved control should not outweigh its benefits. So to illustrate the reasonable assurance, we have these illustrations or figure. As you can see, we have a plane, and with it has bullets or like missiles that it that has a exposure or a hole on the surface, and on the under of that surface is the assets. Just looking at the illustrations, we can say is that the absence of the absence or weakness in a control is the hole, which is exposure. So some weaknesses are immaterial or tolerable. So under the principle of reasonable assurance, this control weakness may not be worth fixing. So ito yung mga yung lumalagpas. So it means, as you can see, hindi niya natataman yung asset natin. So these two bullets or missiles are the immaterial, and the weakness, some weaknesses are immaterial and tolerable, which means indeed ito yung mga weaknesses na hindi siya worth fixing kasi material weaknesses in control, however, increases the firm risk to financial loss or injury from the undesirable the cost of correcting this weakness is offset by benefits derived. So ano itong mga undesirable events? First is the access, yung fraud, yung error, and mischief. So moving on the PDC model. So the PDC model, we have the preventive controls. So the preventive control is the prevention, is the first line of defense in the control structure. Ito yung passive technique designed to reduce the frequency of occurrence of undesirable event. Okay, pag-prevent ng mga uh, pag-passive ng or pag-reduce ng frequency occurrence ng mga undesirable event. Preventive control force compliance with prescribed or desired actions and thus screen out aberrant events. So when yung pagde-design ng when designing internal control system, an ounce of prevention is most certainly worth a pound of cure. And that is true. Preventing errors and fraud is far more cost effective than detecting and correcting problems after they occur. On the other hand, we have what we call detective controls. So detective controls. Detective detections of problem is the second line of defense. So detective controls are devices or techniques and procedures designed to identify and expose undesirable events that elude preventing controls. So detective controls reveal specific types of errors. Ito yung gina-reveal yung mga specific types of errors by comparing actual occurrence to pre-established standards. So when the detective control identifies a departure from a standard, it sounds an alarm. Para siyang alarm na to attract attention to the problem. Third would be the corrective controls. Corrective actions must be taken to reverse the effect of detected errors. This is an important distinction between detective controls and yung corrective controls. Ano ba yung pinagkaiba nila? Dalawa. Detective controls is identify undesirable. Gina-identify yung mga undesirable events and draw attention to the problem. While on the other hand is the corrective control actually fix the problem. For any detected error, there may be more than one feasible corrective action, but the best course of action may not always be of use. So moving on, the COSO internal control framework. So the COSO internal control framework consists of five of components, which are the control environment, the risk assessments, the information and communication, monitoring, and control activities. For the first is the control environment. So the control environment is a foundation for the other four control components. It is because the control environment sets the tone for the organization and influence the control awareness of its management and employees. Important elements of the control environments are the integrity and ethical values of management, the structure of the organization, and the participation of the organization board of directors and audit committee is if one exists, if nag-exist siya. Fourth is the management philosophy and operating style, these procedures for delegating responsibility and authority, the management's method for assessing performance, excuse me, the external influences such as examination by regulatory agencies, the organization's policies and practices for managing its human resources. For the risk assessment, yung mga organization must perform a risk assessment. What is risk assessment? Risk assessment is to identify, analyze, and manage risk relevant to financial reporting. So risk can arise or change from circumstances such as yung changes in operating environment that impose a new or change competitive pressures on the firm. Second is the new personnel who have different or inadequate understanding of internal control. Third is pag new or re-engineered information system that affect the transaction processing. The fourth would be the significant and rapid growth that strains existing internal controls. And also, if the implementations of new technology into the production process or information system that impacts transaction processing, and also the introduction of new product lines or activities with which the organization has little experience, and also the organizational restructuring, which is resulting in the reduction or the reallocation of a personnel such that the business operation and transaction processings are affected. And also if entering into foreign markets that may impact the operation. And lastly, the adoption of new accounting principle that impacts the preparation of financial statements. Thus, the SAS 109 requires the auditors to obtain sufficient knowledge of the organization risk assessment procedures to understand how management identifies priorities and manages the risk related to financial reporting. Moving on, the information and communication. The accounting information system consists of records and methods used to initiate, identify, analyze, classify, and record the organization transaction and to account for the related assets and liabilities. The quality of information that the accounting information system generates impact sa mga management's ability to take the action and make a decision in connection with the organization's operations and to prepare reliable financial statements. For the effective accounting information system, will identify and record all the valid financial transactions. Second, provide timely information about the transaction in sufficient detail to permit proper classification and financial reporting. Accurately measure the financial value of transactions so their effects can be recorded in financial statements. On fourth is accurately record transactions in a time period in which they occurred. So, SAS 109 requires that the auditors obtain efficient knowledge of the organization's information system para maintindihan nila yung classes of transactions, yung pag-accounting records and accounts that are used in processing the material transaction, and also para maintindihan nila yung mga transaction processing steps. And lastly, yung financial reporting process na ginagamit sa financial statements, pag-disclose, and accounting estimates. The next one would be the monitoring. Monitoring. The management must determine that the internal controls are functional as intended. So, yung monitoring is the process by which yung quality of internal control and design and operations can be assessed. Pwede siya i-monitor. This may be accomplished by separate procedures or by ongoing activities. So, an organization internal auditors may monitor the entity's activities in separate procedures. They gather evidence of control adequacy by testing control and then communicate control strengths and weaknesses to the management. As a part of this process, yung mga internal auditors make specific recommendation for improvements and controls. Lastly would be the control activities. The control activities. Control activities are the policies and the procedures used to ensure that the appropriate action are taken to deal with the organization identified risk. The control activities can be grouped into two, which is distinct category, which is the physical controls and the the information technology controls. So in these figures, it's the physical controls. This class of control relates sa mga primary to the human activities employed in accounting system. These activities may be purely manual, such as the physical custody of assets, um, or maybe involve the physical use of computers to record transaction or update of account. So, itong physical controls do not relate to the computer logic that the actual performs accounting tasks. Rather, they just relate to human activities that trigger the utilize the result of those tasks. So in other words, some physical controls it only focus on people but are not restricted on the environment in which clerks update paper accounts with pen and ink. So in the IT control, information technology control derives the financial reporting process of a modern organization automated system initi- that initiates, authorizes, record, and report the effects of financial transaction. So, as such, they are inextricable. These are the inextricable elements of the financial reporting process that the SOX consider and must be controlled. Yung COSO is identified with two broad groupings of IT controls, which are the application controls and yung general controls. The objectives of the application controls are to ensure the validity, completeness, and accuracy of the financial transaction. Lastly, for this topic would be the audit implication of SOX. So prior to the passage of SOX, mga external auditors were not required to test the internal controls as a part of their attest function because they were required to be familiar with the client organization's internal controls. Pero, they had the option of not relying on them and does not performing a test of controls. Therefore, yung mga audit could and often did consist primarily of substantive tasks. Yung SOX is a legislation dramatically expands the role of external auditors by mandating that they attest to quality of their client organization internal controls. This constitutes the issuance of the separate audit opinion sa mga internal controls in addition to the opinion of fairness and financial statements. Yung standard for this new audit opinion is high. And indeed, yung mga auditor is precluded from issuing an unqualified opinion if only one material weakness in internal control is detected. So this is the end of the report of the double rulers. So thank you for watching, and we hope that you learn a lot from us. Thank you again.